Welcome to Budget with Upstox. I'm Monika Halan, and we are decoding issues both macro and micro related to Budget 2024. This panel is about personal finances, how the budget affects you and me. Budget 2024 is expected to do something for the middle class, which has been hurting for a while. There's an expectation that personal income tax rate may be tinkered with. There's also an expectation of some changes in the capital gains tax. Will the finance minister give something to the middle class this year? Will we see a change in the way assets and incomes from those assets are taxed? To discuss all these issues, I have the most perfect panel with me today. I'd like to start the panel introductions by introducing Vishakha RM. She's an insurance industry veteran who has just superannuated as the MD and CEO of the 27,000 crore AUM India First Life Insurance Company. Her award-winning career has spanned across Canara HSBC, OBC Life, Aegis, which was earlier IDBI Federal Life, Universal Sompo General, Birla Sun Life, and the New India Insurance Company. She is now an executive coach and will soon be at Harvard on a fellowship. We have Swarup Mohanty. He is the Vice Chairman and CEO of Mirae Asset Mutual Fund. His career spans 30 years of various roles in the financial sector and is most notably known for his role at making Mirae Mutual Fund a demanded rather than a hard-sold product. His 13-year stint at the fund house has seen Mirae funds ride fear, uncertainty, exuberance and greed. He is also a music enthusiast and hoards vinyl records. Homi Mistry is Partner Global Employer Services at Deloitte. Homi has been in professional practice for more than 30 years and specializes in advising multinational corporations on various matters in connection with international assignees. He has been engaged in managing expatriate programs, covering issues relating to deputation, tax minimization, social security tax credits, immigration, and advising on international movements to and from India. Thank you all for being here. This panel is hoping to address issues which relate to average people, you and me, issues on taxation and personal finances. I want to start on the premise that this is a budget where the expectation is that the government should be giving a boost to consumption. Because at the macro level, what we're noticing is that consumption growth has been very tepid and private investment has been tepid. So one way this government is thinking of doing something is to boost consumption. And also, it's a rare budget where we have the fiscal space, in the sense borrowings are fairly under control, tax revenues are up, you have that bonanza from the RBI which has come in. So there is a fiscal space for a little bit of tax benefit to boost consumption. So two questions actually. Let me begin with you, Homi. Does a tax break really boost consumption? That's one. And two is that expected? And I'll just go around the panel.
Monika, what I feel is that there's an expectation that in this budget, the government is going to increase the exemption limits, both under the old regime as well as under the new regime. So under the old regime, the exemption limit is 2.5 lakhs, and under the new regime, which is the default regime, it is 3 lakhs. So there's an expectation and widely held that the government may increase its exemption limit to around 5 lakh rupees. So that is one thing. There is also an expectation that the government, even under the old regime, may increase certain deductions, certain exemptions. For example, under ATC, you have this deduction for investments in life insurance, in public provident fund, and a host of other tax saving breaks up to 1.5 lakhs. That had been fixed in 2014. It's been 10 years. There's an expectation that they should go up to at least 2.5 lakhs or at least 3 lakh rupees. So coming to your question is that whether these tax breaks or exemptions or increasing the exemption limit will boost consumption. If it is, if these benefits are given, the exemptions are increased, deductions are further increased, definitely more and more people will have disposable income in their hands because paying lesser taxes. And that will be in turn used, the excess liquidity will be used for spending and hence should benefit the economy.
Okay. Vishakha?
It's interesting. Actually, I have I think there'll be double benefits if what Homi said actually works out. One, the savings will increase because we have been seeing a decline in the overall savings.
Correct.
From
Yeah,
the
declining
past decade.
consumption, declining savings.
Exactly. So I think that will probably prompt people to start saving a bit more. As far as disposable income is concerned, I think we've got two segments of people. There is one segment of people who's anyway living on borrowed money. The loans have increased and ostentatious consumption has increased. But there are a set of people who are more reasonable and probably they will start increasing. Consumption also has got to be moderated, right, Monika? It's not about every consumption is good for the economy. It's only consumption which is actually going to, at the end of the day, benefit the long-term investments of the government. That is good. So how are we going to channelize that the surplus disposable income goes into that consumption? Is also probably got to be a very finely tuned tax rates and overall tax. I look at taxation like the way people look at incentives in organizations. The right incentives drive the right behavior. So if you want to make sure that you cover more people under the ambit of tax, so you probably need to see how much lower you can bring your tax rate. I want to make sure that people are saving something for their future because there is no social security and we are losing our edge of being a savings-oriented economy. Then you need to see how you boost your savings. So I think the government can get it brilliant on all the three pillars of one, increasing savings, two, ensuring there's funds for the long-term infrastructure and other investments, and three, to bring in more people into the tax ambit. I think.
Right. Swarup, on this issue.
No, I hope what Homi and Vishakha said turned out to be true. I'll play a little bit of devil's advocate. I don't think they will touch anything in the old regime. This is my opinion because once you introduce a new regime, the focus will be on making that more successful. So a lot of what Homi says might come on the new regime is my view, and they will try to channelize it towards there. I hope we get some increased incentives there for financialization of assets. I think that should be the focus. I hope it happens because that is the need of the hour. But having said that, the government can do something. But what is the big gap is that the need for investing is not arising amongst people. People definitely find merit in buying a new TV, but we have to really fight for them to justify why they need to start a new SIP. So the need for investing has to be something which is very inward, which I think guys like us have a lot of more work to do.
But I thought money is flowing in fat pipelines. You restrict people from putting money. How can you complain?
No, Monika, the net money is not flowing. It's just we are riding the market. The market valuations are riding. Net money is not there. It's money from one pocket to the other. If you see, the net inflow to the industry is less than the gross SIP book. So, but coming back to the tax thing, I think a lot can be done. And I think I echo what Vishakha is saying. It's not about the tax rate or how much you give incentives, but completely about increasing the tax net. And then if you simplify stuff and bring in more people into the net, a lot can be achieved by the country.
We've been talking of this for now decades, that you need to increase the tax net, right from the budget. So I've covered budget for now 20 years.
True.
Every budget, the people who pay tax, who can't escape, we cry that it's a disproportionate burden on us. People who can escape, they come with their wads of cash. They don't pay tax on it. Different things have been tried. Maybe again, I'll just go around the table where, we've tried that 1/6 scheme. There's big data now, but, the cash in the system is not going down. Vishakha, maybe you take that point. It's not, you in fact said that it's actually increasing. You're beginning to see cash come back.
Yeah.
So this angst of this middle class person, we all feel that people who pay taxes really feel shortchanged in terms of the urban infrastructure that we live in terms of some of the amenities. So yes, we made progress on roads and ports and airports, but your everyday urban existence with water, electricity of course has got sorted, but roads, amenities, you feel the pinch of the poor. Not obviously, they're out of the net. The super rich are the super rich. You don't have the political will to tax agriculture. Real estate typically is a preferred asset class. They get a lot of benefits. You still have cash there. So it's this small sliver of the middle class person who feels overburdened. So how do you increase this tax net? How do you get them in?
So I don't look at it as a small sliver of middle class. I actually look at it as all the salaried class.
Salaried class.
Right?
Correct.
So invariably
Yeah.
the salaried class, whether it
Yeah.
is, well-paid CEOs or otherwise, it's going to be all the
You are a
salaried
well-paid
class.
CEO.
I was.
I didn't say that.
Once upon a time.
I can say that. But 2 weeks ago.
Once upon a time, long ago, it feels. But yeah, so that's why I didn't want to use the word middle class, because you carry that. I think it's about how do you bring in more people beyond the salaried class.
Yeah.
Right? And there's a whole huge missing middle in terms of all the small businessmen and all of that.
Correct.
So what I don't understand is, in this world of interconnected data, okay, where every transaction is visible, even if you have to have cash, ultimately that cash has to come from somewhere. If I'm going and buying something in cash, I have withdrawn money from my bank account. Okay, I might feel very happy that it's been a tax-paid money. It's not tax-paid. But if I give it to somebody else, and if we say that's disappeared, that person in turn is buying something. And everywhere there is GST. Every transaction
And
has
they
got
have
GST.
multiple layers of KYC. Like
Yes.
KYC pay. They've got all of that.
Everything.
Right?
So I don't see how, if all the systems really interconnected today, all your direct taxes, indirect taxes, they all got interconnected. I genuinely believe that there can be a system at the back end which can actually calculate tax and calculate income
Like
for
some of the
every
other countries
individual.
do that, right?
Yes.
I think Singapore does that. You just see what you have to pay and that's it.
And it's automatically done. Like even
But
somebody
if they do it here, it'll be like a draconian government, fascist. They'll.
Is it a draconian government?
No.
It's
I'm
about
not debating. I'm saying if the government
I
were
don't
to
think
do
so.
that.
I think it's simplification. I would look at it as simplification.
Okay.
I know a lot of people who would be quite okay to paying tax and not have the jhanjat. ये stress नहीं चाहिए, ये tension नहीं चाहिए. Because not everybody is comfortable having cash. There are a lot of people who are not comfortable with cash, but they just don't want to get into that slab and start getting into paying taxes and all of that hassle. Like the case I was giving you, right? I mean, if you take this missing middle, drivers, people, they're earning about 50,000,
basically
60,000.
the urban informal sector.
The urban
it's
informal
a huge
sector.
slice of population.
Yes, and for them, they're actually saying, we don't mind. As long as we can get some benefits out of it, if we're going to be counted somewhere, we don't mind.
But tell me, aren't they already being taxed on GST? So there is a whole thing of, we have tried for decades to tax income tax population of India. It is not happening. We are too fertile minded. Okay, there's no other way to put it. If we can escape, we will escape. Those who can't pay, then isn't it better to focus more on an indirect tax, which is so in India, we have a progressive indirect tax. Indirect taxes are supposed to be regressive, that they slice everyone at the same rate, but we've built progressivity into the GST where consumption goods, atta and milk and all is zero, and as you get to luxury, it's taxed higher and higher. So you've got a progressive GST. Shouldn't then the focus of the government be more on using that? Because that is a tax you cannot escape. Even the rich farmer cannot escape. Maybe I'll just go round the table on this, yeah.
Yeah. No, the government is obviously focusing on GST.
Okay.
There's no doubt about that. But in addition, the government has also been focusing on the personal tax front. And what the government is saying is that they are expanding the tax base. For example, in talking of tax returns and all, many of the tax returns are pre-filled. Of course, before you file the tax return, you've got to check to see that all the income has been accounted for. But all this information now is being pre-filled and it's being populated through what is called this AIS, TIS. Banks give this information about, let's say there is interest, or companies give about the dividends where taxes are withheld about your salary. So all that information now is available. So everybody obviously has to report that in their tax return. And the government has also come out with other kind of schemes, what they call e-verification schemes and all. They send notices to taxpayers that have they shown this income.
But is it showing up in terms of the kind of it is? You're saying it is showing up.
The government is saying that the collections are increasing both on the corporate front as well as on the personal tax front.
But Homi, I mean, we are in a very interesting situation where income tax is growing faster than corporate tax.
19% and 17%. I mean, that was one thing I wanted to discuss.
How can
that corporate tax share is 17 and personal income tax is 19.
How is that possible?
what I heard, let me tell you what I heard. We've just done a series of discussions. It is the dividend tax part which is boosting. So dividends used to be taxed in the hands of the company. Now the dividend tax falls in the hands of the individual, and you are taxed at income tax rates, right?
On the normal tax
Normal
rates.
tax rate. So dividend income, and this is your really wealthy part of the population. So it is, the difference has been made. The burden has shifted from corporate
True.
to individual, and that's the delta.
And you actually, in the process, in the last few years, decreased corporate tax. So it's not that you cannot decrease tax if you don't want to. But, just at a very philosophical level, there are two things that have happened in the last decade. One is demon. And that's very significant from a tax collection perspective. Because now there's no excuse as to we don't know where's the cash. Every bit of cash has gone into the system and has come out. And then there is this huge digitization, and fact is we are a biometrically identified country, probably the only one in the... It doesn't take a very skilled coder at the back end is what we've asked. So when you have the data.
So again, I just want to ask, as experts of the financial sector, why are we not doing this?
So if you don't penalize, say you don't want to penalize, if you start rewarding people for giving better tax on time, maybe, and create an environment where paying tax is good and kind of bring down slabs to easy level. I just downloaded my AIS and TIS, right? And just reconciling my capital gains is lying on my table for the last 4 days. I'm not even attempting it. No, it's already there, right? If I missed one, it won't miss the... just do a flat thing, pay it out, and keep me happy and give me that incentive to pay it and move on, right? If you simplify it better, I think more people will come in. But if people are not paying and they're throwing up in this, they have to be pulled up. It's time for that. I don't think it will be draconian at all. It will be doing this country a great service, because the people who should pay tax are not paying, and in a basic understanding, the salaried people have only that much money. Right, you're flogging the wrong horse.
And really, I think the population which is hurting is this 5 to 25 lakh.
True.
After a 50 lakh annual package, you somewhere are in escape velocity, 50 lakh and above.
We would be in a 50-50 partnership with the government, right?
So Monika, the whole thing is, you know how it is, right? To answer your last question first, as your income grows, your aspirations grow. So if your EMI was X, your EMI becomes 2X. So I don't think at any point of time, unfortunately, we've not as spiritually evolved. But to come to those two, we're still caught up in the next material position that's going to give us permanent happiness.
Consumption is good. We need that consumption.
We need it. We can't all get spiritual. But on the two other points, I was very eager on indirect taxes. I think that's placing double burden on the salaried. I think
I can choose to consume a lower GST good. I'm just arguing.
No, but the point is, again, advantage is to the non-taxpayer.
Why is that?
Because he's not paid direct taxes and he's only paying indirect taxes. You've paid direct taxes and you're paying indirect taxes. Okay. So I don't think shifting, or you shift completely to indirect taxes and cut away from direct taxes altogether. Then you're not at least being biased against one community. So they can't. So then increasing that is a double whammy on the taxpayers. I think that's just one point. Second, to respond to this other point, what's the give and get to pay tax today? Anything requires a give and get, right? What is the give and get for an average Joe?
Absolutely. Tell me.
And that's probably where the government needs to start specifying very clearly. Do we have an NHS equivalent? Do we have certain amount of money that you can... you've got the entire PM, the JY, the Ayushman Bharat. I've tried to enroll people into it, and it's not easy. It's simply not easy. So I have personally spent time enrolling, and it doesn't happen. And then you have to be in the list, you have to be below a particular band. Now, why don't you just take all the people who are across some money, say that I'll flat charge based on data I've got at the back end. The AIs that gets generated, I don't know who all it gets generated for. Does it get generated for, as you said, the urban non-domestic, like all the drivers who we all pay 25,000-30,000 or more? Does it get generated for that individual? Because we're paying through digital money, we're not paying cash any longer. But who all is it getting generated for? How is that being monitored? What's the incentive for people to pay tax? other than a moral responsibility.
We'll ask the tax
What's
expert.
the give and get?
What
Yeah,
is my incentive? Why should I pay tax?
So coming to your question about, like let's say you're paying a driver 20,000 or 25,000. See, all this information which when it comes in this TIS, AIS, it will not automatically flow like that until the deductor or the payer is also filing forms. So for example, let's say salary is getting reflected in AIS. That respective company will be filing a quarterly statement of tax deduction. So based on that, it will get reflected. If dividends are paid by a company, the company is also filing, let's say, an annual statement of tax deducted. Based on that, the dividends would be reflected. Similarly for interest also. Similarly for credit card payments. Unless documents are filed, statements are filed, it will not just get reflected like that.
Exactly. And the point I was asking is, there is a digital trail. The money is going into that individual's bank account. So it is, I know that in the current system it's not possible, but considering that there is a digital trail, is it possible for us to expand the tax base by looking at the digital footprint that's been left behind?
Right. I want to move to the second topic, which is the capital gains tax. The system that we have right now, I think I don't need to tell the experts, it is quite a mess. You have the same asset class being taxed at different rates. It goes long term at different times because of the manner of its holding changes. You can take real estate, you can take gold. There is non-uniformity in the way assets are taxed. Real estate, physical real estate goes long term at 2 years. Real estate in my mind is a 20-year asset. So when you give a tax signal of even reducing a 3-year long-term capital gains to 2 years, you are signaling to the speculator. A home buyer is not going to flip in 2 years. When you give the reinvestment benefit, so real estate has a reinvestment benefit where if you sell, your profits can be reinvested into 1 or 2 more properties now, 2.
Yeah, you could buy 2, and there's also now they put a cap up, others goes pro rate, like up to 10 crores.
Up to 10, right. So again, in my head, you're boosting speculation rather than pure investment. So again, just starting from you, how should we think of the taxes? So assets will throw off income and profits, short term, long term. How should we tax them?
I think you put it up well. As per asset class and the view of that asset class,
correct,
the taxation should flow. I mean, we are probably the only country which is telling from a tax perspective, debt is long term and equity is short term.
Debt is taxed. I mean, now of course there is no long term in debt, but earlier it was 3 years.
3 years,
equity
yes.
was 1 year.
Correct.
Real estate is 2 years. Physical gold is 3 years. Sovereign gold bond is no capital gains tax. Like, what are we supposed to do?
Again, just extending that same discussion is bring uniformity across. The simpler you make it, the better. I mean, equity debt should be taxed
So
at
should be
par.
taxed all at par. Do you say?
Maybe real estate at a longer, real estate gold because of the physical
nature. But the
nature.
rates, do you think, should be the same?
I would say simplify it.
Simplify it.
Always
Everyone
good.
is taxed at 10
always
or
good.
20.
It simplifies the whole thing. I mean, when you look at real estate, of course, the composition of the money will be larger, so the tax you collect will be larger. It will be as per that asset class and the allocation to that, no? But if you make it, it's my opinion, if you make it straight line, it will be simpler. Now, the whole thing of me sitting on my table and not touching that paper for 4 days is that fear of calculating. That should not happen is my simple submission.
Vishakha?
Now, I think the objective needs to be established again, Monika.
Of the taxation.
Of the taxation. Why are you taxing short-term debt? Why are you taxing capital gains? What is the behavior encouraging?
They just want to, I think the government just needs the money.
So, are there alternate sources of money?
What are those?
Right? I mean, for something as simple as, I don't know how much, today I don't know, maybe there's data available. What are the total dividends that the government gets from all its investments? Whether, since I'm from the insurance industry, whether it's from LIC, whether it's from New India, whether it's from Oriental, GIC, all of these public sector insurance companies,
I'm sure the ministry will have that data.
All the PSU bank. I'm sure the data is available. Okay. And I'm just saying that if somebody looks at that data and says if that income increases by 10%, what proportion is it as compared to personal tax that they're getting? And should they be focusing on having their companies run better and generating more revenue than always looking at it from only the exchequer and the individual taxpayer? Why are they looking at all of those? Where
So
is
alternative
where
sources
is the
of
transparency?
income.
Yeah, where's the transparency to say all the sources of income of the government and what are you doing at all sources? We talk tax so much. Where's the dividend comparison? I haven't read anything on it in all my
That's
years.
an innovative idea. Just last comments on this issue.
No, so coming to your point about this capital gains and different assets, you're right, there are different assets. There could be a 12-month period, a 24-month period, or a 36-month period. It's pretty I agree, there are different periods, and based on that, you'll have a separate tax rate also. Now, there's been discussion that the government is going to look at it. But now, whether the government will look at it in this budget
Very scary to hear that sometimes. No, the government will look at it. Oh my God.
but they may rationalize it or maybe lower the rates, or they may look at it next year. We'll have to wait and watch, In fact, I remember there was a discussion even last year that the government was going to relook at this, but we didn't hear anything further, barring about this market-linked debentures or these specified mutual funds, which are all now classified as short-term.
As short term, right. So we are hearing that there might be something for the middle class in this budget, and there is a crying need to get the capital gains tax reformed and redone. When we think of taxes on assets, there's also this idea of a reinvestment or a rebalancing of your portfolio. So when you sell, say, real estate and there's a profit, you get several ways in which to not pay tax on that profit when you buy other properties, when you buy some bonds. In fact, if you have profits on some other asset class, you can transfer that to real estate. So insurance policies, when they switch in ULIPs within, there is no tax on rebalancing. Similarly with NPS. But equity doesn't have that benefit. Mutual funds, they don't have that benefit. How would you, in the tax system, how should this work?
So if there are some benefits which are not there, maybe the government might look at it, if representations are made, for example, the mutual fund industry, that let's say you have mutual funds and you sell them and you buy other mutual funds, etc. If maybe representations are made that you should also give the exemption, as you're doing maybe in the case of real estate, or these specified capital gain bonds like REC or NHI bonds up to a certain limit. Maybe the government could look at that, to give the benefit.
Do you think it's a good idea? Do you think that? So I'm thinking of a rational tax system which is uniform across asset classes, and it is not preferring one over the other or even one type of an investment, preferring, say, an insurance over a mutual fund. So does it make sense to rationalize it so that as an investor, I am neutral. I make the choice based on my comfort with that route and or that asset class.
Yeah, so I think it's a valid point. It's something to ponder about,
Okay.
And one could look at it maybe in the future, Okay. But again, depends what type. It may not be just any and every asset. The government can't just do it across the board for all types. So as I said, real estate is one. These tax-free bonds are there. They could look at mutual funds because there's more and more demand for these SIPs and mutual funds.
Correct. Vishakha, you don't agree at all?
Not at all. Completely. Because,
Okay.
this is about saying that the asset classes have absolutely no difference, that they all serve the same purpose, that they're all structured in the same manner, and therefore it doesn't matter whether I choose A or B. Whereas the fundamental construct of each of these products is different. The kind of liquidity that you have, just take a debt mutual fund and a equity mutual fund, right? Why do they have different FMCs underlying? Then should you be charging the same fund management charge across irrespective of the fund? No, because they are different because they serve different purposes.
The fund management charges are different basis the asset class.
Correct.
Yeah.
It is.
So
but
no
you,
one is.
See,
we are not arguing for rationalization across asset classes of the costs of the product. This is taxation.
Yeah. So you're talking about taxation across asset classes, right? So when you say asset class, you're talking about debt is an asset class, equity is an asset
real
class.
Estate.
Yeah, and insurance is a separate asset class.
I don't think insurance is. I don't think it's an asset class. I think it is the underlying is a fixed deposit bond, equity and debt. Like the underlying is equity and debt.
So, which is where I'm saying that we're kind of losing the essence, because here the risk, if I just take two products, right? And you're looking at debt as an asset class. I'm saying debt mutual fund and I'm saying debt non-par. product. Because a non-par also typically invests in debt. The debt mutual fund, the risk is completely on the investor. In a debt non-par, the risk is completely on the company. Okay? How can they both be considered as the same asset class from an investor perspective?
Should not a ULIP and a mutual fund be taxed similarly? Because ULIP is actually a mutual fund with the trust of insurance.
Let's look at
so
that.
So leave
also,
the par product because that's a bank FD. In my head, a par, it's like typically because they invest largely in bonds.
So the non-par products, I'm not even talking about the par. I'm talking about the non-par because there's an upfront guarantee, there's an investment underlying. So
but even the par products, their investment mandate is largely into bonds.
No, so that's the whole point, right? The whole par product and the non-par products are governed by an ALM.
Right.
So they have a liberty to invest in any class. So there are some companies which go up to 30% in equities in that because the risk is completely on the insurance company.
So let's say when the risk is on the investor as in a ULIP, then is there a case for equalizing the tax?
It is, right? Today ULIPs above 2 lakhs are charged the same as mutual funds are. So that rationalization has already happened. But to compare the par and non-par products with any other product, okay, just because underlying assets may be classified into this, I think would be a big disservice to the understanding of the product itself.
Swarup, do you think there's logic in, when the mutual fund thing began, awareness was not that great, but now it's a very different market. SIP somewhere has replaced recurring deposits in the minds of investors.
Not yet, but
it's
on the way.
There. I mean, look, there is
on the way.
In a country size of India, there is enough population who's really doing this. So do you think this is time to now take it up a notch and introduce something which allows this rebalancing to happen? Maybe within a fund house, I would ideally like it between fund houses.
No, I'm just saying, I'll take a thought from Vishakha which said, what is the essence of tax? And I'm going through the real estate thing, so I'm just living it through. Because my whole encouragement is, if I sell this house and I buy another one in 2 years, then I get this rebate. So the encouragement is to stay within the real estate asset class by giving this tax incentive or whatever. I think if you extend that, like Homi said, to say equity as an asset class, why only mutual funds to equity, then this whole debate of people not investing for the long run and not creating the wealth which they could have in this country can be resolved. I mean, you say, okay, you sell, but within this much of time, if you reinvest that much of money like real estate back into equity, you can do that. It will help investors thought at a very, very basic level. It will encourage them to stay longer in the markets. And if they have booked profits or got out of some equity spaces for whatever reasons, they are given the chance to remain in that asset class for a longer time. I think it's a very good thought. And if it's an out-of-the-box thought, I don't think it's possible too quickly.
Not this budget, but just thinking ahead.
I think from the essence perspective, and I'm not restricting it to just mutual funds, I'm talking about equity as an asset class or say debt as an asset class, whether mutual funds use it or insurance use it, that's a separate issue. But the encouragement should be to stay back in that asset class like I'm encouraged to stay back in real estate. That fundamental thought is not flawed at a fundamental level.
So somebody had this idea that a wrap account is created where if you can buy whatever you want, as long as you don't redeem that out of the box, you only get the benefit if you keep it for 30 years or 20 years or 10 years.
That is what is allowed, say in insurance, you
Correct.
switch.
You switch.
A switch there and switch here are considered two different things, right? Yeah. But if I'm switching from equity to equity, then since I'm remaining in that asset class, then you should be encouraged to do that.
Right. So I haven't understood, why does real estate get so many free passes? That my profits from equity market can then go into a house. What does that tell you about the way that policymakers are thinking? For me, it seems, and this is really, people who were sitting on defined benefit pensions are extremely suspicious of markets.
True.
They like their assets real. Gold, real estate, insurance, because of the legacy of putting money in insurance. But there's a discomfort. Would you agree with that?
I would definitely agree, because at a conceptual or policy making level, the importance of personal finance has to come in far deeper, and the impact or the brighter impact of personal finance for the growth of this country needs to be understood for it to be then, put into place for a wider audience than just real estate.
So the way I think about it, Monika, is that stuff like FDs and gold, and the volatility is much lower. Like whether it's life insurance or FD, you only know that the fund keeps growing. So even if the profit is not realized, it is real. So once that amount is credited to you, it is there. The problem with equity is that it is never real. It is always notional. And I think for an ordinary individual to wrap your head around the fact that ये पैसा जो मुझे दिख रहा है, whether it's in insurance or it is in bank or it's in gold, is पक्का पैसा. Okay, whereas this money which is there in equity is notional. Market कल गिर गया तो this whole thing can go.
But isn't that true about gold also?
Yes, but I think the history has been that gold normally doesn't have as much
That's
as
where
volatility.
I was
The
emphasizing
history
on.
has been that the Sensex has given a CAGR of 14%.
Absolutely, with the volatility.
Fine, but
So
gold
I-
also.
Gold, that's why I didn't want to get into gold as much. That's why I repeatedly said FD
Yeah.
and insurance.
I come from
I
an
did
FD background. I can assure you 10 out of 10 people on this FD investing community do not know that it is unsecured. None of them know.
No. Well, let's not get into the
So that's why. So when you say
underlying
कि वो
security.
पक्का है, it is not pakka.
No,
And
no.
that's something which...
Oh, you're taking it to a second level argument. I'm still talking at the first level. First level pay, this amount that's been credited to you. Now, if that underlying bank fails, is there a guarantee? That's a whole different ball game. That way, all these underlying companies could fail. Is there a guarantee? So we're not going to the
like
second
we
level.
are associating that risk with equity. That risk prevails there is not known to people, and it's not talked enough.
I'm just is as a statement of fact. The amount that I have got today in my mutual funds is notional until I book it.
True.
As a statement of fact. As a statement of fact, the amount that I've got in a fixed deposit or in an insurance, the amount has been credited, is available to me as a guarantee.
I
That's
would
just
agree
a
with that. No,
fundamental
because
fact.
see what is the history of bank failure in India? When have depositors got hurt? So just as a matter of, again, history, other than
Monika,
cooperative
banks have failed. They have been absorbed. That's a separate
right.
issue.
So that is a regulatory and policy
Correct.
understanding that in a country like India, you cannot have depositors which bleed. You have investors who hurt. But this 5 lakh rupee insurance is there more as a mental support.
True.
But it would be a very brave government which will let a large bank go belly up. Just in terms of the political, what do you think?
No, I don't think the government would let any bank go down under anything. There may be restrictions. They may take over a bank, which has happened in the past. But India, the government will definitely not let a bank
Because the
go.
signals are just completely.
Yeah,
So
there could be chaos
I
there
would
in the
agree
system.
with Vishakha that it is realized money that you have.
I come from a Korean background, and my Korean background says, don't conclude.
Okay, I want to move to the next part. I want to talk about this new versus the old tax regime. And Homi, we'll start with you. So the idea was lower compliance burden, lower tax rates. Are people moving? So the old tax regime, you get all the deductions and the exemptions. There are no rebates anymore, I think. But and the new tax regime is supposed to be smoother, cleaner. One, is it working? Two, are people transiting?
So definitely more and more people are opting for the new regime. And as the government announced last year, it's the default regime. When you fill up also your tax return, it automatically shows that if you're opting out of the new regime, then you got to tick a box. Otherwise, it comes as no. So yes, it's simple in the sense that not too many deductions. One is obviously the standard deduction for the salary class up to 50,000 rupees. That is one major deduction. There's also another deduction that you can claim under the new regime is for this NPS contributions made by the employer.
So they are introducing deductions back. So my problem with changes in taxation is it begins at 30,000 feet to say no deductions, no exemptions, and then they start coming. I'm hearing of some other deduction which is coming in the new tax regime now. So, we are back to square one.
But they're not, I would say in the new regime, there are not too many.
Why? Look, the government begins with this promise. Nothing, no bells and whistles, straight taxation. And then you start tinkering. Like, what is this tinkering? Why?
No, then the other option is to further increase the exemption limits for the new regime.
Yeah.
Or maybe reduce the tax rates further
That's
and
right.
not give any further deductions.
Absolutely. Why would you not do that? Vishakha, why would you not carry out the promise of a simple system and start again tinkering. Same thing. 5 years later, there's no difference between old and new.
It's a hypothesis, Monika. I'm not sure if I'm right,
Okay.
but the hypothesis that I've got is that the moment they made it so simple, okay, there was no money coming into the NPS, there was no money coming into any of the securities of the government. There was nothing coming there.
No, we're talking of the new tax system, not the
new
NPS.
tax system. It started introducing limits again, right?
Right.
So it started introducing limits which will ensure money flows
Oh,
into
so
that.
You're saying that the government saw a reversal in their flows.
I mean, NPS, why would anybody put any money into NPS today? The only money which goes into NPS is that from the central government and the state governments and all the government schemes who have a defined contribution scheme. But the NPS was supposed to tap into an entire...
But isn't it true that corporates are increasingly shifting into
Their
the
superannuation?
NPS?
Yeah, but that's only if an individual is opted for superannuation. If individuals who don't opt for superannuation, there's no NPS liability at all. So how is NPS going to grow? How is that fund going to grow? And more importantly, I think it's important for it to grow, even from an individual perspective, because who's going to fund your retirement? There's nobody who's funding your retirement.
We have
for you.
mutual funds here. What do you think on this?
I think I was just going back in my thoughts when NPS started and funds were bidding for it. And the question in our mind is, you've made it so cheap that you've left no money for it to be sold in the market.
Yes.
There is no sales process for NPS. It's a fantastic option for people.
Yeah.
Just on the merit of costs. If you had added a little more to it before killing the cost of it, you could have today an army of people actually going out and talking about the merits of NPS. But just from that perspective, to echo Homi, I think if I were the powers to be today, I would actually give a 2-year break on the new regime and say I'll cut it down for 2 years, and only for people who add to this is the new tax regime for 2 years, and increase the net. And then encourage, because I just came out of a meeting in my office, the young lady said the new regime is fantastic. But if tomorrow she comes to hear that these things are beginning to come in,
Right.
then what you say is correct. Then
because
why?
you're back to those
Yeah.
deductions. And again, is it the government's job to nudge investor choices in this minute manner? That NPS mein dalo.
So it's philosophical, which is
Huh.
where we started off with.
Yes.
Do we believe that this entire taxation, okay, is an art where it's supposed to serve the objective as a welfare government to look after the people from whom the tax is being taken and to ensure that the government gets the money that they want? So is it really, in parlance of corporates, is it that perfect incentive scheme wherein the customer is also getting the right product, the seller is also selling the right product and gets the right commission, the company is also making the right money? So is taxation far more complex, and should it be? In my mind, it should be. I think taxation should start with a why, and the why cannot only be increase the coffers of the government. It also has to take into consideration the requirements of the people, given the changing dynamics.
Right. So I want to, last part of the conversation. So we've had government pressing the pedal on capital expenditure last few budgets. It's done very well. The multiplier effects are beginning to show. There are worries about the consumption story, that consumption has faltered, is not growing that far. It's not growing. It's, I think, 4% growth. And private investment was supposed to take over the growth baton, the investment baton from the government, which we are not seeing. And this is an equity question, which is that there's a whole generation of young people who have understood that markets do well. 30% return for them is like what? So they have sort of grown, they have come into a market which has been on a bull run. Expectations have got built. My worry is that unless this investment comes in, there are very bad outcomes ahead. So just on this question, just bounce this around and say what happens next.
Very loaded question, Monika.
Yeah,
I
it's
wish
a
I have
complicated
the answer
story.
to all of them. I'll
Yeah.
attempt. To start with, I think consumption needs a boost, and I do suspect we'll see some of it coming in this budget. It might sound like a populist budget from the political perspective, but I think it is the need of the hour. We'll see some of it coming, is my
And your
opinion.
expectation is that this boost comes in the form of a tax reduction,
Should
is it?
be for some of the...
It's a very small part of the population. Just to argue back, It's a very small part of the population who pays tax. What consumption will you boost? And what if they pay off debt and don't consume?
Yeah, that's the catch-22 which you talk about. So easier said than done. The government will have to do its
Can
bit.
they do something else to boost consumption?
I don't think they will do. I mean, I don't want to comment
so
on that.
another panelist said that why not extend ATC benefit to buying a TV, a phone, a washing machine? You show the receipt. I don't know, how would you react to that?
I would definitely agree on that, but I don't think, I have not seen that creativity, to be very honest, in the last 15, 20 years happening, so I will not bet on it. But the other part is, of course, when you look at the capex part, and what you said is pretty interesting, because that would be the real trigger for the market. And to be fair to the government has held on to its capex part and left it on to the private side to start. But when you look at the environment is still not running full capacity. Most of the balance sheets are running on 75-80% order book. So till that does not get overcapitalized.
And China has so much excess capacity.
Yeah, and that's the last part. It's easier said than done. Things like commodities and all are run by China worldwide. So it's more complicated than we think. The global data is still very fragile. So at this moment, probably we don't see it coming from a year, but some parts we've already seen. I mean, some green shoots, energy capex has already started. Power capex, though mostly PSU has already started. So some amount of capex is beginning to fill out, but the back end should have been motor vehicles by now. We're still running 75-80% capacity. So that will take some time, but markets are completely isolated for this. At this moment, markets are driven by liquidity. And the flow in the market is just unbelievable.
Liquidity is coming from retail.
I'm just breaking it down. I mean, let's take some basic figures. Vishakha, correct me if I'm wrong. Say SIPs is 20,000, 2.5 lakh crores. We're talking about PFO at least 75,000 crores. 3 lakh 25, insurance na karke 50,000, maybe more, not less. So we're talking about an in-house DI buyers of almost 4 lakh crores sitting in front of you, ready to buy at all falls. So where is the downside? The unfortunate thing
is scary.
It is scary.
Because unless you have these large IPOs, I have a supply problem of stocks.
No, but you're going to see one Hyundai, which is a very classical
Hyundai
case.
Is one, of course.
Yeah,
but I need to 100 Hyundais coming in.
No, but if you look at the market over the last 5-7 years, the market caps have grown, the number of industries that have come in, especially in the mid-cap, small-cap. Look at the MC industry, we're completely a mid-cap story, right? Hospitals are a mid-cap story. So, a lot of new industries are being added, and it takes time, right? But we are in that direction. But to say that markets will be impacted by this for the short run, I don't see any impact.
Okay. Vishakha?
It's interesting that you say that, because the deep down chartered accountant in me comes out, and I'm like, how much of this is notional? Where is the real growth in these companies where the value has gone up so much?
P's of 100, what's happening?
Yeah, I mean, for what?
Just 1 minute. I have not discussed P's, I have not discussed valuation, I have not done that.
I know.
I'm just saying there is money, and that is the only thing at this moment. Not only, broadly, that's the thing
which is
driving.
the problem. So what I'm saying is that it's only being driven up because of fundamental supply-demand economics. True. And that's always scary, right? Because when it's not on the basis of intrinsic value or on growth. It's only on the basis of an economic law that the markets are going up. That's not the best outcome to have. So that's worrisome as far as I'm concerned.
Yeah, Homi, any thoughts on this issue?
I agree with Swarup that yes, investments are going up, more and more industries are coming up, and I'm definitely more and more capital investments will be made in different industries. Yeah.
Okay, so that's hopeful. That's good to hear, because actually, unless we keep the growth momentum, this exuberance will probably really peter down, and this experience that people have had of buoyant markets will probably not bear out. So I'm going to wrap this session. This was great. I want to take last closing comments, starting with you, on this whole issue of what we're expecting in the budget in terms of taxation, specifically for us as individuals.
Yeah, so I'm expecting that, and there is a big expectation that the government will increase these exemption limits, maybe both under the old as well as the new regime. They may give further deductions and exemptions. So there's definitely some expectation on that. Yeah.
And anything on capital gains you think they will do?
Capital gains, now whether they'll do it in this budget or the next budget, we'll have to wait and watch, whether they'll rationalize the rates or, they'll rationalize the holding periods for different assets. We'll have to wait and watch.
Okay. Vishakha?
I believe taxation needs to be looked at as a tool to drive the right behavior and achieve the right outcomes. And it should be looked at holistically along with all sources of revenue and not as a standalone.
That's a 35,000 feet. We're talking of budget 2024. What is your short-term expectation? Because we've already had a vote on account. They're not going to do anything drastically different.
At a budget 2024, I hope there's enough realization that life insurance as a category is a complete separate category. Don't make the mistake of kind of clubbing it with other financial products because it is different.
Okay.
It is long-term and it is an ALM tool. And I hope that that whole rhetoric that's so much there against insurance is really spelt out and understood. The products are not bad. The structure is not bad. Maybe the implementation
we just need better regulation.
Maybe
to
the implementation.
Keep people in the product as they're supposed to. Like I have always believed that on the two ends of the spectrum, the really poor and the really rich, it's a tool for preservation of capital. If only it was constructed better and sold better and people would stay.
Absolutely. I think the product structure, there's nothing wrong. The fundamental underlying principles are not wrong. The implementation is probably questionable in some places where people get, taken away by short-term KPIs. But I think if it's administered well, there isn't a better class that should be encouraged.
Swarup, comments?
No, I think insurance and investments are two different words. If they meant the same, there would be one word in the dictionary. It's better to keep the two separate, and there is merit for both, right? It's when you mix the two, the issues start. But having said that, coming to the budget, I think if they don't tinker much, it will be great news. If they don't try to invent too much, people are looking for continuity. I would expect them to sort the capital gains issue this budget, because we are about turning into the bond index right now. Lot has to be done for developing debt in the market, and that's completely gone out. I do not buy this whole argument by banks that mutual funds are getting money from them, because if somebody buys a stock, they would take money from the bank, the buyer then puts the money back in the bank. So that's a very flawed argument that we are actually benefiting from them. We are not. But it's better that is sorted. Sooner it's sorted, better. I am expecting it in this budget.
Okay. So on that note, I'm going to say thank you to all of you. This was a great conversation. Thank you for making time. So what we are hearing from the experts is that there are expectations of some rationalization of taxes for you and me. We can now just wait for budget 2024 for that to happen.